Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks notched new record highs on Thursday as Wall Street filtered through a fresh wave of earnings while keeping an eye on President Trump's campaign against Federal Reserve Chair Jerome Powell. Guys, stocks were really green. We continue to see market breadth improve. That's a good thing because market breadth was looking real shaky on Monday as well as last week. And we said we needed to see breadth expand. Breadth is expanding, green through and through. Everything from infrastructure, semiconductor, software, tech, financials, industrials, defense, discretionary, comm services. Everything was actually broadly green today. We only had two sectors that saw red returns, and that was XLRE down 0.1% and then XLV. These generally tend to be defensive sectors, with gold also falling 0.22%, the S&P 500 gaining 0.61%. And again, guys, the sectors at the top, financial, staples, industrials, materials, energy, broad-based gains in the market year today, led by cyclicals, led by sensitives, really solid stock. This is exactly what we needed to see, and the S&P 500 notching another new all-time high. Guys, then it wasn't just large caps, it was actually small caps and mid caps, broad performance. In fact, small caps completely outperforming, and I think the market, especially with these small caps, is really starting to price in rate cuts. Trump has ramped up the rhetoric with regards to rate cuts. Fed Chair Jerome Powell really putting pressure on the Fed, really using that I'm going to fire you as a tool to possibly get his rate cuts maybe in the month here of July, maybe in the month of September. Either way, small caps rallying on the fact that we could actually see a lower Fed funds in the future. And that is why we're seeing growth core and value outperforming the last couple of weeks. And the mid caps also outperforming. And then large caps still green today, led by large cap growth, but core and value kind of sitting on the sidelines, but still getting a little bit of a bump up. And guys, I think today, and I think the major reason for this actually had to do with some of the economic data we got as well as some of the earnings data. But let's talk about the economic data first. Number one, retail sales smashed consensus estimates. Look here, retail sales 0.6 versus 0.1, the actual versus the consensus. Now, what I personally like to look at is the retail sales core control group, because this adjusts for a real GDP or nominal GDP and PCE inflation, right? It gives us a real aggregate of where the consumer stands relative to the strength of the economy. And that came in much better than expected, 0.5 versus 0.3%. You can also see here that initial jobless claims was also very cool, 221K versus 235K. So essentially what we're seeing is that the consumer has jobs, the labor market is tight, and they're spending. That's evident by retail sales absolutely smashing the consensus expectations. Really good. And I think that's why earnings season is looking so good right now. Consumers have jobs, consumers are spending. You never want to bet against the American consumer. What also helped sentiment today is we got some very positive momentum with regards to crypto. The House passed a bill that established the first federal framework for dollar-backed stablecoins and outlined how other digital assets will be regulated. Major victories from an industry that has pushed for more favorable oversight in Washington, D.C. The stablecoin legislation known as the Genius Act will go directly to the desk of the president, who pushed for that law as a part of his wider aim to help make the U.S. the crypto capital of the world. It passed 308 to 122, so somewhat bipartisan support. Two other bills passed by the House, known as the CBDC Anti-Surveillance State Act and the Clarity Act, will now go to the Senate. Their fates are ultimately unknown, but the House passed stablecoin legislation, and that will be signed into law. In other news that was, I guess you could say, weighed on sentiment, Trump did come out. This was, at the start of the day at the open, and he says he has plans to tell over 150 countries that they will face tariffs likely between 10 to 15%. But the market literally just shrugged this news off, continued to make a new all-time high because of the economic data we got, the movement we got with crypto, as well as earnings, which was absolutely fantastic. I mean, we had Taiwan semi-report earnings today, a monster quarter. Earnings per share up 57%. Revenue beat expectations. Earnings beat expectations. Gross margins expanded to 58.6%. And they kind of raised guidance. They said that the scheduled volume production in the US for chip making is accelerating and moving well ahead of schedule. That is almost like a guidance raise, and that is why the stock was up 3.38% today. Netflix reported earnings after the bell. Now, the stock was up 1.9% on the day, down 1% here in the after hours, and that's because it beat on revenue, beat on earnings. Now, guys, this was absolutely crazy because Netflix reported a double beat. It actually raised its full year guidance, and it said it's on track to double its ad revenue in 2025, coming ahead of consensus expectations. The stock actually fell on that news, right? Barely moved here in the after hours. This is where you take money off the table. 54 PE, it seems everything is priced into Netflix right here. If this report isn't going to move the stock up like 10%, I don't know what is. If you own Netflix, take some money off the table here, guys. It seems like everything in the world is priced in. Pepsi up 7.45% today after it reported a double beat, beating on revenue, beating on earnings per share. And the story here was one of international trade. International really saw like robust growth, and the market really liked that. Pepsi also hasn't performed well, so to get this earnings report is the reason why it was up 7%. And I think we'd probably go ahead and see the 150 mark before the next earnings season. Now, another market mover here today was BitOrigin, ticker symbol BTOG. It was up 90% today, and this was some of the craziest news I have ever seen, right? BTOG is going to raise $500 million, right, in a convertible debt as well as the sale of its stock to buy Dogecoin, making it the first US listed company to adopt Doge as a core treasury asset. Dogecoin, guys, that's what they're doing. Just nuts in my mind, but this is the type of stuff you see at market tops, right? Like long-term market tops, euphoria, you see this type of speculation, but we'll see where this goes, man. Some of the craziest news was this BTOG. I'm still trying to like digest it all. And then, guys, another market move here was Evolution AB. Now, I own the stock in my portfolio. It was up 7% after it reported earnings, and it came out with a solid Q2 report. Now, revenues only grew 3.1%, but that beat the market's expectations. A beta margin came in at 65.9%. Very solid. Management's guidance was for 66% to end the year, so it looks like we are going to get that EBITDA margin, a guidance that they guided for. Europe revenues did decline, but better than expected. Latin America revenues slowed, but again, better than expected. Asia revenues re-accelerated, and this is part of the reason why we saw the stock up. And Asia actually saw 3.9% sequential growth. And arguably the most important figure was North America, which saw year-over-year growth and sequential growth of 23%. The market loved what the CEO said. And guys, I have a full video breaking down Evolution's earnings. It's a cheap stock. I talk about what is my targets. Is it a buy right now? So go ahead on the second channel, FinFluential Media. You can go check out the latest earnings here from Evolution AB. We also have one on ASML, JP Morgan, Micron, and a whole bunch of other stuff, but we are keeping track of all of the major earnings season. And I'm also going to do one on TSMC or Netflix, whichever one you want, leave it in the comment section below. And then for everything we saw today, there was a 5,200 advances, 2,000 decliners. We saw net inflows, or net outflows, I should say, in the Nasdaq 100 and the New York Stock Exchange. The S&P 500 up 0.54%, and market momentum looks very solid. We've recaptured the 50% mark in the 5-day moving average. Things looking really solid. We're breaking the 60% mark here in the 20, 50, 100-day moving average, and I think we're going to go continue to retake those in the 150 and 200-day moving averages. Guys, market momentum is on the side of the bulls. Right now, all you want to do, right, even though things look frothy, is hold assets, maybe trim some of the bigger names in your portfolio, stuff like Netflix, maybe take some money off the table there, but ultimately it's a risk on environment. You want to hold equities and just extract as much upside in this bullish momentum. Now, guys, looking at the charts, you can see we had a very bullish day through and through, but again, led by some of the higher beta names. Look at the IWM, mid caps, small caps. Look at the RSP, outperforming the large caps, the Nasdaq 100 and the S&P 500. Very solid stuff. The IWM continues to just chug along, and again, anticipating rate cuts incoming. You can see that growth did outperform value, but still both green, still both ripping to the upside, and we're looking slightly bullish here in the after hours, in the extended hours. Futures have opened the new day, and we're up ever so slightly with slight outperformance in the Russell 2000, and it was a bullish day everywhere. Look at European stocks, Middle Eastern stocks, the Chinese stocks, the volatility, the VIX actually fell, both the front month and the spot VIX, and then we actually saw the 30-year yield and the 10-year yield pull back. The 2-year yield gained ever so slightly, but the dollar was up 0.34%. The dollar literally went from the 96 level, and we've been bullish on the dollar, to the 98 level, and I do think it's going to go higher. I think we're going to see 100, 101, potentially 102 in the dollar. Just going to see a little bit of strengthening in the dollar as the TGA refill continues. TLT was kind of flat, and that's because the 30-year bond, the long bond, was flat. And then Bitcoin was up 1.56%. Ethereum was up 3%. Gold and silver were flat along with WTI. Definitely a day for higher beta. You could see crypto rip to the upside, smaller caps rip to the upside, higher beta rip to the upside. But the S&P 500 also just made a new all-time high, and that's not bearish at all. I mean, this is, you can see the daily chart right here for the S&P 500. And that's another all-time high but ultimately what we're doing is we're sort of just digesting this massive move to the upside here at the top end of this range. And like I said yesterday, we're going to trade in this very wide range. We may go low, we may make all-time highs, but ultimately we're just digesting this big move you could see right here. And that's really, really a good thing, especially as we begin to exit July. Generally speaking, August, September tends to be a little bit of a weaker time in the year, seasonally speaking. And so we should see a little bit of that digestion. Now, I'm not saying we're going to fall out of the sky. I'm just saying that, we should expect in the month of August and September, digestion, maybe a little bit of lackluster returns, but ultimately we still want to be long because I do believe, October, November, and December, we're going to see a really strong bull run into 2026 where we see earnings and margins accelerate as we really finally get the tariff volatility behind us. There is still some of that at the moment, the market kind of brushing it off, looking ahead to the second half, looking ahead to 2026, and that is why the S&P 500 continues to make new all-time highs, along with the Nasdaq 100. That's another new all-time high. Guys, the option market, the call wall has not moved up. That's very, very interesting. So you could say the Nasdaq 100 year is overextended above its skis. We'll see if that moves in tomorrow's trade. The IWM, guys, looking at the Russell 2000, let's just go to the futures here, looking very, very solid. It's making higher highs, higher lows. It hasn't quite hit the high that we put here in the middle of July, or the start of July, I should say. But looking at the core wall, there is definitely upside for the IWN. And this looks like a very, very healthy chart, if you ask me. I mean, we're just making higher highs, higher lows, and it's very likely this trend will continue to the upside to this core wall, especially as we get more certainty on what's going to happen with the FOMC, rate cuts, etc., etc. Guys, the place to be right now is just in risk assets, in equities. Ultimately, you want to have exposure to small caps, you want to have exposure to mid caps. Great ways to play that is just through the S&P 400, the mid cap ETF right here, the S&P 600, if you don't want to hold the IWN, which has a lot of unprofitable companies, but you will get outperformance in the IWM, both to the upside and downside, or underperformance, I should say, to the downside. If you don't want to hold any type of small caps, you can just hold the RSP, the equal weighted. That is seeing mild outperformance. But look, largely, I think the best place to be is probably the S&P 500 or the Nasdaq 100, and then hold something like the mid cap or the S&P 600. You could also just hold the S&P 1500 if you don't want to manage 2 ETFs or 3 ETFs. You could just get an ETF that has, the S&P 1500, which is the S&P 500, the S&P 400, and the S&P 600. That makes up the S&P 1500 in totality. European stocks, again, very similar to what we're doing in the S&P 500, right? We're just going to be trading in this range. Ultimately, we're looking to find support here at the 535, potentially as low as the 527 level, looking to retake these highs right here. And this is a very, very strong support zone. We used it as support and resistance many, many times in the past. Let's look at Middle Eastern stocks. Continues to climb. You see we had a bit of a pullback here, looking like a higher low. I think we're going to go ahead and retake those highs right there. Good for a very short-term trade if you want to extract $1 or $2 out of the Israel ETF, ticker symbol ISRA. Looking at KWEB, up 1% today. It looks like we're breaking out above this level right here. If we go ahead and just measure that right there, you could say that we are maybe starting to form a breakup right here. We broke above, pulled back, and used as support, and now we're looking to make the next move higher in Chinese stocks. I do think China stocks are going to go higher, and I think you can target the upside there of the $38 level. Guys, looking at the dollar, the TGA is being refilled, and we're seeing some very much good strength in the dollar. Ultimately, look, we are seeing upside here in the dollar, but ultimately what we want to see now is we want to break above the $99 area. If we can reach the $99 area, maybe take it to 100, that would signal upside potential. But what you ultimately want to look at is if the TGA continues to be refilled, you will see strength in the dollar. So do expect this trend to continue. And that is after a very, very long downtrend. So to be expected here. And I do think you should see the strength in the dollar persist probably to the end of the year, somewhere along there, maybe into early November, along those lines. Guys, you know what's up with gold. We're trading in this range, looking for a break to the upside or downside of the 3,200 or the 3438 region. And then Bitcoin continues its move to the upside. You can see that we are consolidating at the top end of the range right here after this hefty breakout above the 110,000 level. Now, if we do pull back in Bitcoin, right, a great place to probably go ahead and buy would be this 110 level right here. You could probably go ahead and sell calls at this level in something like IBIT. So if we do pull back in Bitcoin, don't be surprised. However, you do know that the path of least resistance continues to be to the upside because of M2 money supply. And with Bitcoin, if we do pull back here, expect to find support and expect for us to move higher. I think any pullbacks in Bitcoin will be bought religiously because I do think we're going to see 135, 140, potentially 150,000 before the end of the year. But you can see we're just consolidating this massive move off the lows. If we take a peek to trough reading, right, to where we are right now, that's a 62% move from the 6th of April in Bitcoin to where we are right now, the 21st of July. Guys, that's like what, 8 weeks? Just crazy. 9 weeks, 10 weeks. Absolutely insane to see that type of momentum in such a short period of time. If we actually go ahead and look at Ethereum, right, it's had an even more insane move off these, April lows right here, 150%. Absolutely crazy. Ethereum treasuries are absolutely booming right now. There's this company called SBET, right? SharpLink Gaming. It's an Ethereum treasury company and it has absolutely rallied. I mean, this is the daily chart. You could see a huge move up, a pullback, and then off the lows right here. We'll take a measured move, right? From the June lows to where we are right now. That's a 300% move to the upside. I am bullish on Ethereum. This is a levered way to play Ethereum. This is probably what MicroStrategy was in like 2020. So if you do want a levered play on Ethereum and you don't actually want to hold like the 2x ETFs, this is a great way to go ahead and do it. And another symbol is UPXI. Very, very similar. I think this is a little bit cheaper on a market cap to net asset value basis. But ultimately, guys, there's just risk sentiment right now in this market. And the best thing that you could do is you should already be long. The best thing you could do is hold, just sit through the volatility. There will be ups, there will be downs, but ultimately the path of least resistance is for us to move higher through the end of the year into 2026. So any dips we do get, buy those dips. Guys, and looking at sentiment, this is the AA sentiment survey, and bullish sentiment among AA members declined for the second consecutive week to 39.3%. Bullish sentiment increased ever so slightly, and they are roughly in balance. So an equal amount of participants believe the market will either be bullish and or bearish over the next 6 months. That's very, very interesting, reflecting growing caution about the stock market's 6-month outlook, especially as we have seen bullish sentiment decrease and bearish sentiment increase ever so slightly. But this is neither a reason to get bullish or bearish. I think ultimately what this market data is telling us is that you really just want to hold equities, and we probably will see a little bit of volatility over the next 6 months. And ultimately, you want to be looking at stuff like earnings, and earnings is looking very, very good. Right now, earnings season reporting 6.5% earnings growth. Coming into this earnings season, we were looking for about 5.5%. We were looking for about 3.3% in revenue growth. We're reporting 4%. Really good earnings season so far, guys. And look right here, 81% of S&P 500 companies have reported above the analyst expectation. However, take it with a grain of salt because only 36 companies have reported, and it hasn't been the tech giant market movers like Nvidia, Apple, Microsoft, Google, Meta, etc. So we still have the majority of companies yet to report, but that is set to change over the next couple of weeks as we get these big tech earnings come to fruition. But as it is right now, tech earnings looking really, really good, led by comm services, technology, financials, and to a degree, even the real estate sector. And guys, powering the earnings is what I consider to be quite a robust macro with everything. Fed's GDP now sitting at 2.5%. This is the Q2 estimate. And guys, inflation, right, even though we did see a tick up in the CPI earlier this week, what comes next is extremely easy comps. And over the next 4 months, we should actually see inflation continue to decelerate based on the comps from the same time last year. We also got initial jobless claims today, and that came in very, very good, telling us the labor market continues to be robust and actually somewhat tight. 221 initial jobless claims were reported for the week against the forecast of 233
and against last week's 228K number. Really, really solid stuff. Data tomorrow, guys, we just get building permits and housing starts. That's the big one, just to give us an indication as to where the residential fixed investment part of the market is, the housing market. Essentially, the consensus says for 1.39 and 1.3 respectively. We also get the month-over-month figures. The forecast is for negative 1.7% and then 2.7% respectively. And then we also get the Michigan consumer sentiment reading data. I mean, earnings tomorrow, we just get American Express, Charles Schwab. Those are the two big names. Just get Triple M, but we are going to cover American Express on the second channel. But if you made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.